I'm Jeff Pospisil, the treasurer for the Dakotas Conference of the United Methodist Church, and this is a training video for pastors on clergy taxes. So each year I take our new clergy through this as well as accountable reimbursements as part of their training. The quote I like is from Will Rogers. The income tax has made more liars out of the American people than golf has. We have a very complicated system, and guess what? Clergy taxes are probably about 3 or 4 times more difficult than even regular income taxes. Our goals for this session is that number one, will increase your awareness of the tax challenges facing clergy. And two is that hopefully you'll learn some practical tips and strategies on how to take on this challenge. There's a so that you, have more money in your pocket. I think money in the pocket of a clergy person is a good investment, much more than money in the pocket of the federal government. So, and then number two is that you spend an appropriate amount of time and energy worrying about your tax issues. So I'm not going to remove all your worries on taxes, but I don't want it to consume your ministry either. I don't want it to derail your ministry as has sometimes happened to some of our clergy. First, we're going to look at the confusing nature of clergy taxes. This quote by Albert Einstein is, "The hardest thing in the world to understand is the income tax." And again, I believe that clergy taxes are 3 to 4 times more confusing than the rest of the income tax system. So that's saying a lot. So what we're going to do is we're going to go through a series of questions that will hopefully help you understand just the source of why this is so complex and so confusing. So the first question is, are pastors employees of the church or are they self-employed? And the answer to that is yes. And this really drives at probably the primary reason why clergy taxes are so confusing, because the IRS holds the position that pastors are employees of the church. They should receive a W-2. The Social Security Administration says that the pastors are self-employed, so the church cannot withhold for Social Security or Medicare, and instead the pastor has to pay self-employment taxes. So this is really the heart of most of the confusion. The second question is, how can pastors make their tax payments? So should they be like an employee that has payroll withholdings, or should they be like a self-employed individual and make quarterly estimated payments? And the answer to that is yes. They can really do either. Most pastors, I think, still make quarterly estimated payments, so they pay their taxes indirectly. But if your church already is withholding for lay employees, then it's really no extra burden to have your person doing your payroll withhold taxes as well. And it makes it easier for you. You have one less thing to think about because it's happening automatically. So the church, they can withhold for income tax purposes, but they can't withhold for Social Security and Medicare. But they can withhold enough to cover your self-employment taxes. So no matter what you're doing, if you're setting up a savings account to make your quarterly estimated payments, or if you're having it withhold, make sure that you withhold enough. And I do provide a calculator, a clergy tax estimator, so I'll include a link to that. But yeah, I can't encourage you enough to not undershoot this number. The rule of thumb used to be 30%. So 30% of your paycheck should go towards taxes. So if you're paid $1,000, $300 would be set aside for taxes. Some of that has changed with the Trump tax cuts. So now there's a little bit more variability there. 30% seems like it's on the high side. At the lower side, it's probably closer to 20%. But either way, you want to make sure you withhold enough, and either using my spreadsheet, talking to a clergy tax professional, or just aiming high would be the way to go if I was you. The third question, can pastors really opt out of Social Security? And the answer is yes, kind of. When you first become a pastor, there is that option to opt out if you are morally opposed to such insurance programs. Now, that's kind of the gray area. Thinking that Social Security is a crappy investment, that's one thing. Is that the same as being morally opposed? Probably not. But if you are morally opposed, you do have the option to opt out. And this is much more than a financial decision because you end up paying almost no matter what. Um, so if you choose to opt out, the thing that you have to think about is a lot of your United Methodist benefits depend on you being in Social Security. So your retirement, your death and disability, those kind of things are tied right to the Social Security program. So if you were to opt out, and I'm not recommending this, you have to think about retirement, what to do if you die early, what to do if you get disabled, those kind of things, what to do with your health insurance in retirement. So just things to think about. The fourth question, is housing taxable or not? So whether you are provided a parsonage or maybe instead of a parsonage, you receive a cash housing allowance, is that taxable or not? And the answer to that is yes. So again, this goes back to our old disagreement between the IRS and the Social Security Administration. So for federal income tax purposes, the parsonage or cash housing allowance is not taxable, but your housing is taxable for Social Security purposes. So for your self-employment purposes, you're going to have to pay 15.3% of the value of that. The hard part is with the parsonage, how do you value that? Because you're supposed to be taxed at the fair rental value of that benefit. And so that becomes very subjective. You know, I've often told people maybe if you talked with a realtor, they would give you an idea what that would be worth. Um, what we do for our pension program is we assume housing is 25% of your base salary. So maybe that might even get you in the ballpark. So, but pick something. And again, if you're paying it in for Social Security purposes, you will see a benefit in the future for not going too low on that. So, and also, it's the right thing to do is to pay your fair share. This section, we're going to go over the clergy comp form, and the quote from Arthur Godfrey is, I'm proud of paying taxes in the United States. The only thing is, I could be just as proud for half the money. So, with your clergy comp form, that is a good tool for helping you reduce your tax bill legally and ethically. But it's also, by the way, we designed this to help your treasurer be able to pay you accurately and also report taxes accurately. So that's also another thing to pay attention to. So the first one is the designated housing exclusion. And this is found on page 1, section 1, and this should almost never be zero. Even if you live in a parsonage, it should almost never be zero because a housing exclusion will cover all those properly unreimbursed housing related expenses. So, and we'll go over the whole list of those sometime later. And it's different than the cash housing allowance. So the cash housing allowance is money that's paid to you, extra money on top of your salary that's paid to you. The designated housing exclusion is actually part of your salary that is designated for housing. And so if you have a cash housing allowance, it would cover any additional costs that are not covered by that cash housing allowance. So again, it should almost never be zero. Another thing is it has to be declared ahead of time. It can't be declared retroactively. So most of the people that are going to watch this, it's going to be right around June or July. If they finally remember in September to get that they need to declare a housing exclusion, well, guess what? Your housing exclusion starts and covers only expenses beginning in September. You can't include July and August. So that's part of that. And it's good to estimate high. So when you're calculating how much you may need for a housing exclusion, you look through what you think you're going to spend and estimate high. So for example, let's just say um, you're moving into a new place, and so you estimate $5,000 for your housing exclusion, and you only spend 4,000. Well, that means you're going to have to that extra thousand that's excluded from your income, you're going to have to add that back in, no problem. So, but if it's the other way around, let's say you spend 4,000 and you only designate 3,000. Well, guess what? Those extra thousand of expenses, you're not going to be able to exclude that from your income, so you're going to pay more than your fair share. So that's the word of warning around that is estimate high. The next section to consider only applies if you are on the conference's health insurance program. So if you are on the conference's health plan, you can reduce your taxable income for your medical and dependent care expenses. And you do this during the annual election process or when you very first sign up. But normally it's the annual election process in early November that you can decide how much money you'll need for to be designated for medical or dependent care. And there's really two types of accounts. So if you are on one of our HSA plans, you can put money into a health savings account. This is an account in your name that stays with you, whether you stay or leave the denomination, whatever happens. So that's your money that can be used for health related purposes. And then there's the next group, which is the medical reimbursement account and dependent care account. These are flexible spending accounts. So this is money that's put into a conference account that reimburses you. And these are more or less use it or lose it. So you need to be aware of that. So if you elect to have $2,000 withheld from your salary to go to your medical reimbursement account and you only spend 50 bucks, guess what? You're going to lose a lot of money. So you do want to be a little bit conservative there. And here's the big thing about that. This is going to reduce your taxable income for self-employment as well as income tax purposes. So if you designate $1,000, you might end up saving yourself $300 worth of taxes. So that's what we're looking at here. The last one to consider has to do with those of you that are enrolled in our pension program, and that's the UMPIP contribution. So UMPIP stands for United Methodist Personal Investment Plan, and this is a retirement account. So think of it as a United Methodist 401k account or a United Methodist IRA. So they are retirement accounts, so there's certain restrictions that make it difficult to use that money until you are retired. And there's three different ways to have this withheld or to make those contributions. It's before tax, after tax, or Roth. Before tax will reduce your taxable income this year. After tax or Roth will reduce your taxable income in retirement when you receive distributions. Um, just a note is that the distributions that you receive from these accounts, they will be covered also by your housing exclusion. So you might be able to write off that income as well through that housing exclusion if you have housing related expenses still. So that's just a note to think about. And then another thing that's kind of related, I'm sometimes asked, can you have your tithe withheld from your paycheck? And the answer to that is yes, you can, but it doesn't reduce your taxable income. You'll still get uh, a, I guess, a donor statement or a giving statement from your church, but this would be an after-tax contribution. In this section, we're going to talk about how to win at clergy taxes. And the quote that goes with this is J. Paul Getty, if you get up early, work late, and pay your taxes, you will get ahead if you strike oil. Okay, you don't need to strike oil to get ahead on your taxes, but here's some uh, practical tips and tricks that should help you stay ahead of things and avoid some of those um, common errors that can really hijack your ministry. The first thing to do is to get your treasurer on board or whoever does your payroll, to try to connect them with the resources that'll help them do their job well. I remember it was about 18 years ago when I first became a church treasurer, and I was an active CPA at the time. So when I was hired, it was just assumed I would know everything about clergy taxes and how to do payroll for a pastor. Well, I didn't know squat. That's just very rarely is that part of the formal education for anybody really. So so I just had to call my CPA friends and I was able to get connected with resources that help me learn about this subject. Well, most of your church treasurers are not going to be so lucky. So here's what you can do to help them though. First of all, we email the pastor their clergy comp form. So this is basically what the file will look like. Um, we also send a paper copy to the church with the treasurer's name on it. So they should be getting that paper copy plus an explanation on how to pay you correctly, how to read that form and how to pay it correctly. We do the same thing at the year end. So right in December of 2021, we'll send email another copy to you and mail a copy to the treasurer. And the copy there will have a guide also that will show you not only how to pay correctly, but also how to fill out your W-2 correctly. And so that is a very important resource. So just double checking with your treasurer that they receive that will do a world of good. Next thing you can do is encourage them if they don't know. Most of them should, but to go to www.dakotasumc.org. They could also, by the way, connect with any one of us in the office at yeah, that's why that's a primary reason why we're here. So, but they can go to www.dakotasumc.org. There's a lot of resources under finance and benefits. You'll see legal resources, finance administrative resources, stewardship resources. We also do a quarterly webinar, Sherry Meister and myself, which is kind of a nice way to get to know us in a way in that you can listen to us. You can ask questions, and just a good way to connect as well. So that way, it makes it a little easier when you have to make a call or an email to me. You already feel like you kind of know me. Um, the last one is about a year ago, maybe a year and a half ago, I launched my blog, jctaccounting.com. And so I post a lot of stuff there. Every week I post something, sometimes twice a week. But there was things on the PPP loans, on the Families First Coronavirus Response Act, the Employee Retention Credit, the South Dakota grants, nonprofit grants, plus other practical stuff like on QuickBooks, on budgeting, on all these kind of things that should hopefully help them. So, I mean, not everyone's going to apply to them, but there will be stuff out there. And actually, what I normally do, so I get an email from a treasurer, they'll ask me a question. Guess what? I bet you I have the answer in a post already. The second thing you need to do is you need to get a system that works for you to collect those tax records that you're going to need for your tax professional come year end. And whether it's a paper system or maybe you do Dropbox or Google Drive or something like that to collect those records, either way is fine, but it'll make your world a whole lot easier. You'll save a whole lot more on taxes if you can get a system down that's just easy and fits your lifestyle. So whether you use a paper system or an electronic system, this is going to be the basic folder structure that I'm going to recommend for you, at least to start with. You're going to want to have a separate folder if it's electronic for taxes, or a box or something like that for paper. You're going to want to sort it by year. So you're going to want to keep each year together separately from the other years. You're going to need a folder for housing expenses. So if you're going to have a housing exclusion, you're going to need to prove those expenses. So your utility bills, your receipts for housing related expenses, and I'm going to show you exactly what expenses count for that in the next slide. You're going to need a folder for funerals, weddings, and other types of things that are not part of your church work, because these go on what's called a Schedule C. So you're going to want to also like track any mileage related to these things, as well as any other expenses you might have incurred. So maybe if you get a small gift for the couple for the wedding or something like that, everything that you can think of that's related to funerals, weddings, and other kind of side jobs that are really not connected to your church work. Another folder you're going to need is for docs and taxes paid. So I'd also put your clergy comp form here. If you do quarterly estimated payments of your taxes, you keep track of that there. Pay stubs, you would want to keep that there if you get a pay stub. Um, W-2s, 1099s, all that kind of good stuff is what goes in here. Then you're going to want to track any unreimbursed expenses. So any unreimbursed expenses, and this is not the housing related ones, but these are work related ones, because you'll be able to also write these off towards your self-employment taxes. And then the last one is the miscellaneous folder. So the rule of thumb, if you think that there's a tax consequence to it, go ahead and file it and let your tax professional decide on it, because it'd be better to have too much information than not enough information. And then you're going to want a folder again for the next year. So a lot of times they'll be starting to overlap. You'll be collecting the rest of your 2021 information, getting your W-2 as you're starting your 2022 year as well. So I often get asked, does the IRS have a list of housing expenses that I can write off? And guess what? They don't. It's a really gray area. And that's one of the scary things about the IRS is that they leave things very gray and they're the sole judge of it. And I think they like it that way. Anyway, um, so it's been trial by fire for a lot of CPAs, a lot of pastors, and we have a list. And I've compiled this from two main sources. One is Richard Hammer, and the other one is Marilyn Perry. And they are experts in the area of clergy taxes. So on the left, these are more if you didn't are not provided a parsonage. So down payment on a home, mortgage payments, real estate taxes. So you're going to be able to double dip on that if you itemize your taxes. So you're going to be able to write it off for housing expenses as well as if you itemize. Property insurance, rent payments, all your basic utilities, homeowners association dues, and then on the right is more if you for either one. So either one. So renter's insurance. So if you do live in an apartment, that's provided for by a cash housing allowance, or if you live in a parsonage, you should have renter's insurance. Furnishings and appliances, including the purchase and repair, decorations. So that's an important one too that I think gets overlooked. Structural repairs, remodeling, yard maintenance, and then there's all that miscellaneous stuff. And the basic thing is, it's not just household supplies, like toilet paper wouldn't count because toilet paper is to maintain your body, but paper towels are to maintain the house. They're to clean the house. So that's my hopefully this helps you. So there's been a number of fairly recent tax developments, and these are things that you need to be aware of, and maybe they can go in your miscellaneous folder. The first one is around moving expenses. So if you haven't moved in a while, there's been changes, and this has actually been about 3 years ago, I think. But it used to be if you moved over 50 miles away to start a new job, that you could write off those expenses that you incur, and you didn't have to recognize any income for employer paid expenses. So now your expenses are no longer deductible, and if the church pays for it or reimburses you for it, it's going to end up being taxable income that goes on your W-2. If the conference pays for it, it's going to come to you on a 1099. So you'll get a copy of the moving bill, and you're going to eventually get a 1099 from us. That'll help show you and prepare. The average move costs, I think it's right around uh, $5,000. So this might end up being an extra $1,000 in taxes you're going to have to pay. So just know that and be prepared for that. The next one is there's been a bunch of COVID related tax stuff. And the main ones that I want you to know about are the FFCRA is a big one. That's a tax credit for if you miss time because of COVID, and this is because you were sick with COVID or a family member is sick with COVID and you had to care for them, or you missed time because of the vaccination. So, and if you do that, you need to record it for the medical stuff. You need to record that as well as the time you missed. And this is a significant credit for your self-employment taxes. And I think the current time period as of today is if you're sick anytime from 2021 up through September 30th. So that's going to be the deadline as of right now. So if you miss time, it's through September 30th. And I had a friend of mine that was out for 2 weeks. They filed their taxes. They ended up reducing their self-employment taxes by $2,000. So that's a significant credit that easily offsets your moving expenses. Um, Also for your church, though, for lay if you have lay employees at your church, and if any of them miss time for that reason too, the church gets the tax credit. And so that ends up being a good thing as well. The employee retention credit, that is for lay employees, and this one is going to run out at the end of June, but the church would claim it in July. So if your church hasn't heard about this, it's something to at least share with them and make sure they know about it, make sure they've thought about it, because the amount is going to be similar to what the PPP loan was, at least in the ones I've worked with. So that'll make you look smart if you bring up the employee retention credit as well as the FFCRA if your church has lay employees. The last one is educational assistance. So Before the CARES Act, uh, a church or any employer could not help pay down the student loan debt for an employee without it being taxable. Well, the CARES Act changed that. So now if a church decides to help pay down your student loan debt, maybe it's a part of a Christmas bonus or something like that, or whatever, they could do that and it's not taxable, assuming they adopt a Section 127 plan. And I do have a template for that, so that's not a problem. The other thing is, and so that's kind of unlikely there, or it doesn't happen that often anyway, but there are Investing in Leaders grants. That's a program that Diane Owen facilitates that provides up to $5,000 per year for student loan reduction over a 5-year period. And this thing sunsets in 2025, so it's perfect timing for this. Um, but if you receive that, to avoid it being taxable, $5,000, again, that's going to be about $1,000 worth of taxes. But if you want to avoid that $1,000 worth of taxes, your church can adopt a Section 127 plan. We could give the grant to the church. The church would give it to you. So that's I guess that's the word of advice on that one. So this is a tip for those of you that are going to be making quarterly estimated payments. So this doesn't apply to you that are having your taxes withheld from your paycheck. So these are the important dates. These are the deadlines for making your quarterly payments. So you need to put them on a calendar, put them in your phone, put them on sticky notes, whatever works for you so that you do not miss these. And here's going to be one of the tricky things is they're not evenly spaced. So you're going to see January, April, and then June. June is only 2 months after April. Why, but it's still the full quarter. So you're going to still owe for the full quarter, and then September, and then there's a 4 month gap between September and January. So I don't know why they do that. Again, this is the IRS. That's why they're feared. So you don't want to miss that. And one of the big ones too is April. That's going to be also the filing deadline usually. That's usually the filing deadline. So if you owe taxes still from the previous year, you're also going to have to make your quarterly payment for the current year at the same time. So that can be a killer if you're not planning ahead. And if you're going to withhold enough taxes, one of the things, or you're going to make quarterly payments, I do have the clergy tax estimator to give you an idea. Although that does not replace a tax professional. A tax professional is probably the best place to go, and a clergy tax professional. Speaking of clergy tax professionals, here is my list of ones that I would recommend that serve the Dakotas. So these are people that have a lot of experience in clergy taxes, plus they are connected with the Methodist system, so they understand Methodist clergy taxes. So I encourage you to go ahead and contact them and start building a relationship there. And this is going to be money that's so well spent. I know if your second career, you might think, well, I've always filed my taxes, or I have always went through this person. You need a clergy tax professional, at least for 1 year, because it is so much different that it's easy to mess up. And so it's good to get it right and at least get that pattern down, even if you're only going to do it once. But I encourage you to probably go through them all the time because there's always going to be changes as well. All right. So if you do have any questions or comments, go ahead and contact me and I would be happy to help you. So, all right. God bless you.